Hello everybody, my name is Mark. Welcome to another one of my investing videos, and in this video I am going to talk about what is my investing strategy for the year of 2018. Happy New Year everybody. So without further ado, here it is. Now if you've been watching my videos, then you can already guess what it is that I'm doing. Yes, I am doing an option collar strategy, and I pick Bank of America for the year 2018. So you can see I circled in yellow highlighting. I own 600 shares of Bank of America, and then I bought 6 put options at the strike price of $27, good all the way until 2020 of January, and that is 2 years from now. Today is January 1st, 2018. Happy New Year everybody. And then I sold 6 call options at the strike price of $32. Those things expire April the 20th, 2018. That's about 3.5 months from now. Okay, and here is a quick little snapshot of my positions, and that's my long stock position. So that's $17,712. That's the money that I have invested in my 600 shares of Bank of America. And then right there, my long options, those are the 6 put options that I own, and there you can see I have a total of $1,671.06 invested, and down there is the short option value, so $337.98. That's what I've got invested in those. Okay, and here is a snapshot of the transactions that I made, and you can see that all of this happened. I did all of this on December the 14th, 2017. That's about 2 weeks ago that I did all this. And the first thing I did is I bought 200 shares of Bank of America, and you can see it was at the price of $28.95. Second thing I did was I bought 6 put options at the strike price of $27 for 2 years at $315 a contract. And then the third thing I did was I sold 6 call options, $32 strike price. All of this done on December the 14th, 2 weeks ago. Now you may be scratching your head and say, wait a minute, you only bought 200 shares. I thought you owned 600 shares. Well, if you go back to this slide and you see on April the 19th I bought 400 shares of Bank of America at the price of $22.93. So I already owned 400 shares of Bank of America, so I only had to buy another 200. And you can also see I did an option collar back then. Okay, and so this is a chart of Bank of America, and that little blue arrow, this is a 3 years chart, and that little blue arrow you see is right at the point that I got in Bank of America. And you can see right there, that's the move that I caught. And so I made several $100s on this position. I had 400 shares and I made very good money. I'm very happy with my performance over the year of 2017. I had a very good year. I had a positive year. I made money, and I'm happy about that. Okay, so that's that blue, again, that blue arrow is the point where I got in. And right there, again, back to my transactions there, I underlined it in red. That's my new dollar cost average, $28.95. Again, bought 200 shares because I already owned 400 shares. And then that's my new put option strike price, $27, and $315 a contract is the investment. And then that's my new call option level, $32 strike price, took in $55 a contract. Okay, so what does all that mean? Here, nice and neatly on its own separate little slide so that you can see crystal clear. Number 1, I own 600 shares of B of A at $28.95 per share. And then number 2, I bought 6 put options at $315 per contract, and that's a $27 strike price, expires January 17, 2020, good for 2 years from now. Wonderful protection, wonderful strategy. I'm just totally in love with the option collar strategy. And number 3, I sold 6 call options at $55 per contract at the $32 strike price, expires April the 20th, and by 2018. That's about 3.5 months from now, and those call options pay for the money that I spent on the put options. And that's the option collar strategy in a nutshell. When you're doing an option collar strategy, you can pick any stock that has good liquid options like Bank of America, and you buy shares, 100 or 200, in my case 600 shares, you buy the same number of put options. The put options are contracts to sell that stock at a set price, and those put options go up in value if the stock goes down in value, and that protects the value of your investment. And then number 3, you sell call options, and the money that you collect or receive on those calls pay for the money that you spend on the put. So great strategy here. And moving on here, the 600 shares, and you see I underlined my total investment is $17,370. The money that I spent on the 6 put options is $1,890, and then the money that I received at $330 is the $55 times 6 contracts. Okay, so putting it all together, my maximum risk loss between now and January 2020, that's 2,000 years from now, which is the time that my puts expire. Number 1, the first thing, and you got to go step by step. So the first thing you do is you take the share price that you got in at. In my case, it was $28.95, and then you subtract the strike price of the put options. That's the price that you can sell Bank of America if Bank of America drops to no man's land, right? And so you subtract those two numbers, and you get $1.95 per share. $1.95 per share, and then you move on to number 2. Number 2, the second thing you do is you take that $1.95, times it by the number of shares you own. I own 600 shares, and so my maximum share loss is $1,170 in the next 2 years. And then number 3, I take the premium that I spent, and I spent $315 per contract for those 6 put options, and I multiply that, and then I get $1,890. Moving on to number 4, I take those two numbers. I take the money that I could lose, the $1,170 share loss, and then I add the money that I spent on the puts, $1,890. I add those two together, and my total loss is $3,060 that I could lose in the next 2 years. But then moving on to number 5, I sold the 6 call options, and this is one of the key critical components of an option caller strategies, is you want some income. You want to pay for those put options. That way it's not coming out of your own pocket. And so I made $330 between now and April, 3.5 months from now, April 2018, and then I take all of that, I take the $3,060 in number 6, I subtract the $330 that I'm going to make between now and April if B of A stays below $32 a share, and my total max loss between now and the next 2 years there at the bottom is $2,730. So what does all of this mean? My maximum loss is $2,730 out of a total investment of $17,370, and this is in the next 2 years, and it comes to a negative return of 15.7%, or an average of 7.35% loss per year annually. And this is if things go horribly wrong and we enter into a major recession. Then yes, I could lose that money, maybe, and that's if I just sit around and twiddle my thumbs and maybe I don't get out, don't set a stop loss. Maybe if I just sit around like a rock and do nothing, yes, I could lose that, and I cannot lose any more than that. But take a look at this, okay? This is the ETF on the S&P 500, ticker symbol SPY SPY. I circled it in red in the upper right hand corner, and this is the chart of the S&P. This is what the market's done, the S&P 500, in the last 20 years, and you can see there have been 2 major recessions in my lifetime in the last 20 years. The first one, I highlighted them in yellow. That happened back during 9/11, and then the second one was during 2008-2009 when the housing market crashed and President Obama took over. I don't blame it on Obama. I just think we were in a lot of trouble back then. And so these 2 recessions, both times you can see the market lost well over half of its value. That is 50% loss. And I am not, ladies and gentlemen, I am not willing to take a 50% loss to my money ever. So I am more than happy to cut that down to a 7.35% loss. That's the most money I can lose per year. A total of 15.7% loss, $2,730. I cannot lose more money than that because of those 6 put options that I own and those call options that I am selling. So this is it. This is my investment strategy for the next year of 2018. Happy New Year, everybody. I hope you enjoy this video. If you have any questions about what I'm doing about the option caller strategy, feel free to leave those in the comments section. I like Bank of America a lot. Let me just say though, I am not a licensed financial advisor, so don't do what I do just because I do it. Make sure you do your own study, your own research, and make your own decisions, because you are responsible for all your own decisions. Do not blame me for anything, because I am not giving anybody financial advice. And here is my lovely little disclaimer that you can read at your own leisure. So thank you for watching, and I hope to see you in another video. Have a nice day and Happy New Year.